Will the Nasdaq drop 10% in the coming weeks? Why I think gold has an over 80% chance of breaking above $3,500 next week. And will Ethereum drop 10 to 20% in the next month? I make my case that it will. Hello, welcome to the Trading Pit, personal investing and trading tools for the active trader and investor. I am Lundy Hill, and this is not financial advice, and past performance is not necessarily indicative of future results. Here are the charts that I have found interesting in the week ending June 20th, 2025. First, we go to the Nasdaq weekly chart. Nasdaq failed to make new all-time highs for the last 3 weeks, and it tried. The last 2 weeks have formed a tweezer top. A move back down to fill the huge May gap means a move down of 6%. A move lower down to the 1900, the 19,200, that's a $2,400 move. That's a move over 10%. I note the tweezer tops over the last 2 weeks. Here's the next chart where I've highlighted similar patterns in the Nasdaq and their subsequent down moves. We see these tweezer tops play out again and again. Well, not again and again, 2 or 3 times in the last year and a half or two. Anyway, it's a rare but very valid signal. Also note that the Dow Jones 4-hour chart, I don't have a chart with me, had 2 closes below its 50-bar moving average. That could be the first sign that the stock market as a whole is turning over, which means Nasdaq, Dow, and the S&P 500, as well as the Russell. Next, let's go to gold. Gold had a down week this past week. Is this just a 1-week correction before new all-time highs? I think the odds definitely favor it. Here's why. This year, gold has had only 6 down weeks before this one, and all but one of them were followed by immediate $100 plus rallies. And I've marked 5 of the down weeks here. We noticed that the down week marked at 3 was real close. You definitely had the second week was a down week, but that high week was a spinning top. The close was just slightly below the open. To me, that is almost a push. Either way, you do the math, and there's over an 80% chance that a 100% rally will happen next week. Of course, past performance is not indicative of future results. But on a different note, we go to silver. Last week, I brought up, here's a silver 4-hour bar chart. Last week, I brought up a possible island top formation. This is my pattern number 1 of 9 patterns that signal a trend change. This week had a new move highs breaking above $37 for the first time in over a decade. Did you buy the move? I came close to buying, but I did not. I hesitated because I did not like the follow-through. In fact, there was very little follow-through on that first bar on a closed basis. And the prices as a whole did not hold. And another smaller island top was formed by the action today. Last week I mentioned that a reaction down to 35.50 could be possible. Prices reached a low of 35.83 today on Friday. Big gap down open today if you ignore the night session. It was a gap. That might be a low, it might not be. But it's nonetheless formed an island top, and we still have the big gap over the $35 area. Next, let's go to crude oil. Last week I said crude oil could react down to 70. It reacted to nearly $67.50, so it reacted a lot more than I thought it would. Where the daily bar chart found a lot of buyers down at that 67.80 area. We note the tail and the strong tail on the low of that bar, which is 5 bars ago. on the second red bar from the right. And then we promptly found buyers there. From that prices rallied and closed slightly higher for the week. I'm expecting a minor pullback here and then a test of these highs. There's a huge top tail formation from 77.50 down to the $73 range we see, which was a response to the Israeli and Iran conflict. If this tail gets taken out to the upside, all the sellers in that tail's range will have to turn into buyers or they face steep losses. And to me, that could send prices above $80 and possibly well into $80, maybe $82 a barrel. Next, let's go to sugar. Sugar made new move lows. Not much to report there. I've been short sugar for a little bit. I expect lower prices down from here. On the chart, we fulfilled the short wave projection of 2 cents below the breakout. That's noted by the red line, which is the narrowest of the up moves in this downward triangle here. The breakout was around 18 cents and prices hit 16 cents today. The next wave projection is 4 cents from that 18-cent breakout, and that puts sugar around 14 cents a pound. And then finally, the largest wave would put prices below 13 cents a pound. This is the sugar number 11 contract. Here's a fun story. If you don't know, my father is John R. Hill. He was a famous trader, author, and speaker, and he started trading in the 50s. In the 1970s, he liked to trade sugar a lot. One year, he had a really good run in sugar, so much so that he bought a boat and he named it Sugar 11, and we would go out on that boat on the weekends. True story. Finally, let's go to Ethereum. Ethereum weekly chart is interesting. After the yum break, which is that wide range break about 7 bars ago, I highlighted that here weeks ago at $1,800, noting the yum break. Ethereum has tried and failed to make new move highs above that 2750, and each time it's been turned down 6 weeks in a row, and you have these dramatic top tails. And this past week, ending today, price had its lowest close in 6 weeks. So momentum is shifting to the downside here with a possible move to $2,000 or lower. Key support comes in at the high of that low bar just below $1,750. Thanks for watching. Please leave a comment with what you thought and like and subscribe. Again, my name is Lundy Hill. I'm a lifetime veteran of commodities. I grew up in a trading family. My father's a well-known trader. Again, please like and subscribe. Have a good day.